Time for oil inventories, trading some kitty cat. What do you stink? Sound like a plan? Can't see that. Introduction. Time to turn the brightness down. So welcome to Forex.Today. Let's do our daily Forex trading strategy session. Let me remind you that trading is risk, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. I'm here every single day, Monday through Friday, 7:30 in the morning. Before the New York stock market opens up and heats up for the day. It's also approximately London lunch. It's a great time for us to get together as a community. I'll share my analysis of my thoughts and my years of experience and what I learned is being good or bad in the market, but with the overriding goal of making you a success so that you feel comfortable opening up an account. Let's be honest, we want you to open an account at TradersWay.com. When you feel comfortable to put real money in, you'll choose us as your broker. When you are ready to trade other people's money, you'll choose us as your prime broker, and we'll be your service provider. We will work for you. Right? So anyways, hey, let's get to the markets. I got to move this over here. Yeah. Got to move this over there. Yeah. How's that? Look good? How's that, eh? So I'm going to move that over there. Yeah. Boom. I'm going to make the chat a little bit bigger because I'm on this funny screen. There we go. So let's go through the world. Let's see what the Forex market has given us. Now, yesterday we spent, I don't know, the majority of an hour talking about potential tops or bottoms in the marketplace, even though everything was trending fast and furiously. Is that how you remember things? We had a lot of red zones in play, a lot of green zones in play. Try to change the chair a little bit. Right? Know when to hold them, know when to fold them. Yeah? Is that what you remember? All right. What do you remember? I don't remember anything. So, anyways, let's start with the Kiwi. Yesterday, we voiced our concerns that this was a topish area. Yeah. Well, it respected the M4. Let me zoom in a little bit. Respected the M4, dropped, roll reversal, and is now respecting the R2. Somebody clearly sees these pivots, don't you think? But also notice the price action, right? Higher high, higher low, roll reversal. Higher high, higher low, roll reversal. higher high, higher high, roll reversal. Maybe you're new to that. So let me, I don't know, let's do it this way. Okay. Beauty, huh? So if you thought the trend would continue, you'd do something like this, wouldn't you? I don't think the trend's going to continue. I think it's time for a breather. Now, imagine what would happen on a higher time frame than this 1 hour. What if it was like a daily chart? What would that trader do? Wouldn't they do the exact same thing? But they're looking at it like this is one move, assuming this does retrace. And wouldn't they just do this? With the hopes of down and then up, maybe next week's swing. Isn't that interesting? Yeah, playing off the monthly pivots and stuff. But that's what's called fractal geometry. And what's really interesting about trading is you could drop into a 5-minute and see the same patterns. Right? Isn't that interesting? Fractal geometry. And of course, as you can see, even in reverse, right, it works. Well, I guess you'd have to draw it like this way, right? But how cool, right? Right? Let's, what do you want to, you can call that a lower low or this, I don't know. I don't want to fish too much, but fractal geometry. Is anybody actively working on their fractal geometry analysis? The outcome of such a thing would be long-term long, but short-term short. Right? Up. So think about it this way, like, I have a rule, if you hit your weekly target early in the week, there's a high propensity for a retracement. But that also means maybe on Friday or Monday, you're buying that, let's say, bullish rally back. So you might be long on Monday, long on Tuesday, short on Wednesday, short on Thursday, long on Friday, long on Monday, long on Tuesday, long on Wednesday. Isn't that neat? Is anybody struggling with this issue? No, everybody's good, huh? Everybody's a pro. One thing to use in a trending, in this situation is try to use your oscillators as a clock. Yeah, Ben's been trading a long time, right, Ben? Yeah. How many years has it been? since 1947. So it's something to always be working on, but often I'll use oscillators to say, well, it's going to come down. It's going to come down for 8 hours and then go back up. Yeah, 5 years. That's a lot of trading hours, huh? Yeah, it's not something that ever becomes easy, but it's something that needs to be used in the planning at least. Knowing when, you know, when a move might come to an end. Like, for example, many years ago, I wrote an article for a magazine describing the difference between a good trader and a professional trader or a great trader, something like that. And the major difference was knowing to not put another trade in here. In fact, knowing that you should probably get out of all these previous trades. Where a good trader would just do the same thing he did here, or she'd do the same thing here or here. Why not do it one more time, right? Why not just keep doing it? Inevitably, what ends up happening is, let's say this does come down, they take a loss on this trade, they give away the open profit here, and they're left with all of this, which ends up being about a half as much profit. Right? Because they got 0 on this instead of booking it. They took a small loss on this one instead of not doing it. So they're left with just the total of this, right? Which may, with miss out on the potential opportunity plus the small drawdown, it's half the profit. Plus, and here's the real kicker, you had to work an extra 5 or 6 hours to make less money. Potentially 25 to 50% less money for working 50% more. Simply knowing when the odds of the trend continuing are diminishing, and you simply play the idea that this might go higher. It can, it could, it may even. But out of every time you look at these weekly pivots, imagine you've sat here for 10 years. What percentage of the time do we just blow through the weekly pivots on a Wednesday? What would you venture to guess? %, 20%, something like that, 25%. Ryan says, yeah, maybe twice as year, like that kind of stuff, right? Really, it depends. Is the market bullish or bearish, aggressive, conservative, high volatility, low vol, right? But the thing is, it's not something that is certain, right? There's definitely uncertainty involved. So what if you just played the long-term averages, like you don't really care if it goes higher? You don't care. What if you really had that attitude? You're like, all right, we're all the way to 79. Take profit, go golfing, right? Go golfing for Thursday. Tell yourself you might want to check things out on Friday. Maybe it did go higher, in which case you might consider a counter trend trade. And you just say to yourself, I'm going to remove risk and reward myself with time with my family and friends and sun on my face. Maybe you volunteer at a charity. Maybe you have you ever gone to like a museum on a Thursday at, 10 a.m.? Right? And you're like, right? What are you doing? You're like, well, I accomplished all my goals for the week. Unfortunately, I did it by Wednesday. Right? Oh, is that right, Michael? Yeah, I guess it depends on where you live. I guess it's not a good idea if you live in Paris or something. So, anyways, little price action, little technical analysis, but also a little trader psychology. Does M&M have a museum, Michael? A little bit of fundy, I guess. Is that right? There is an M&M museum. It's the MMM, the Marshall Matters Museum. Museum of Modern Museum of Marshall Matters. Right on. All right, so we very cold-heartedly, callously suggested if you were a bear on Monday, your target this week is in this zone. Where's my swing traders at? Hope you're loving that one if you're a bear. So what do? You're going to let it run down? Hit the S2, or are you going to just take the profit at the M1? Maybe take half at M1? Do you have a plan at all? Already took it off. Now, Pete, you're throwing a lot of energy into the swing trading strategy, right? Pretty major focus of what you're doing. You feeling a little more comfortable with it? I mean, it really comes down to whether your bias is correct, right? Oh yeah, wow. Yeah. But isn't that what it's supposed to be? I mean, it really takes a lot of luck out of it, doesn't it? And that's one thing that is very important, I think, especially with newer traders. Luck is such a big factor in your trading because your entries are not very good, your exits are not very good, you don't have a consistent strategy as far as tactics, you have no fundamental bias, right? So you have no fundamental strategy. Your technical tactics are not consistent, right? And because of that, your stops are probably pretty close because you're over leveraged as well. So you could get it all right and still lose money because your stop's too close, right? And that's where you short, the thing rallies, knocks you out for a loss, and then drops like a ton of bricks without you. So if you can remove all of that by having more reasonable stops, having consistent tactics, having a consistent strategy, meaning you're a bull or a bear. That's your strategy. I mean, that's how complicated trading is. Are you a buyer or a seller? I mean, what other strategy do you need? Now, the other part of that is tactics. Okay, if you're a bear, what price, what pattern, that kind of stuff. Right? You know what I mean? Mr. Lund. So anyways, there's another one, right? So this, we discussed the potential for a bottom here yesterday. We discussed the potential for a top here yesterday. USD yen, another one, right? Wasn't this the potential for a top? 114 psych level, weekly R2, monthly R2. Wasn't this supposed to be the end of the line? What an amazing coincidence, huh? Imagine these days, guys. Remember when you used to trade? Remember that? How would you know? Like, wouldn't it be magic if some idiot came in and said, hey man, this is going to be the top? It'd seem like magic, wouldn't it? Yeah, Peter says, would you ever take a swing trade and then zoom into a lower time frame and scalp in the direction of the swing? Absolutely, totally, 100% of the time. In fact, what I tell people is you should scalp into your swings. But at that point, that's a whole different, you need to know how to scalp first and then put that into a swing. But, they're two different things. But if you know how to scalp, you're obviously going to do that because you're going to get a better price. Okay? But guys, do you remember trading without pivot points? Like, wouldn't this almost seem magical? Remember, the markets are unpredictable, right? There's no way at all. It's common sense. It's taught at Harvard. There's absolutely no way to predict the market. And then some guy says, yeah, I know it's been going up and 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 up, but I ain't going to go any farther than here. It's going to stop right at that line. Magic. It reminds me of the shaman coming out and says, give me your alcohol and your virgins, or I'll make the sun go away. And they all laugh at the old man. And then he jingles his sharp teeth and he stomps his stick on the ground. And all of a sudden, the sun disappears in the middle of the day. And they give him the virgins and they give him the alcohol. He goes back to his tent. And he's like, thank God I found this astrology book. So at least I know every solar eclipse for the next 200 years. Thank goodness. Woo! What would I do without this, right? VFL. Thank goodness. Oh, it's not astrology. I'm sorry. What do you ask? Yeah, astrology is the other. What is it? It's tracking the stars. I don't know. Whatever. Astronomy. Sorry. Astronomy. Yes. So anyways, how funny is that, right? So yeah, it's like, oh my gosh, that guy's magic. And you're like, well, it's really helpful to know that there's a cluster of weekly and monthly pivot points right at that psych level. Right. But by the time you figure all this out, the alcohol makes you too fat and, you can't tolerate virgins anymore. And you're just a rich, crazy old man. All right. Yeah, but one with great stories. I was at the Ritz-Carlton a few weeks ago with my family, and I'd take my wife down to the bar one evening, and I locked the kids in the room with the TV. Probably not a good idea, but whatever. So we head down to the bar, and it's supposed to be a romantic cocktail with my wife. We were sitting around the outdoor fire pit. And it's a time where you're supposed to be staring in your wife's eyes, right? So I'm staring in her eyes. And then, like, 4 old men, like, much older than me, 70s, right? And 75 or something, right? They're older men. Sit down right next to me. And I like old men because I like the old stories, right? But I'm like, I'm not really paying attention. focused on my wife's eyes. And all of a sudden they pull out cigars and light up cigars right next to me. And I'm like, that smells good, but focus, focus, focus. How's your drink, dear? She's like, oh, you probably would like a cigar. No, baby. No, it's just you and me. And then all of a sudden they start talking about their war stories from Vietnam. And I'm like, that stuff. I'm like, I could just sit and listen to these guys talk about their first-hand experience of being in Vietnam in 1966, you know, tromping through the jungles with their machine guns, and this happened and that happened. And I'm like, oh, damn, I can sit here for hours listening to these guys. Yeah. So, stared into my wife's eyes. See, getting smarter. Yeah, how cool is that, huh? I'd love to hear their war stories. But I got my own war stories right here. So 3 weeks ago, we had this coming down to somewhere in here. And then a week ago, or a week and a half ago, we got new pivots. So we adjusted it to 12.17. And the idea is it will hit 12.17, and even though it's dropped for a month straight, $100 fall, it's going to stop. Huh. So I'd like it to at least move sideways. We stop, right? I don't care if it goes up or sideways. I just don't want it to go down now. I'm hoping. So that means if that's true, then the range is here. Okay, so back to the monthly M2. Back to $1,258.25. And then probably back down, maybe back up, I don't really know. You got it? You understand? Any lingering questions? How did I come up with this stuff? Okay, if this is weekly support, that predicts an inside week with a potential high of weekly resistance. So that would be the weekly range. We've already hit according to this analysis. I mean, if you drop below that, game over, right? Then we do something different. You probably just follow this 21. But if this does hold, okay, then the upside of this range is here. So let's say it does something like this. I don't know if there's even that much time left. 50% retracement, all that kind of stuff. Yeah, I mean, it could happen, right? But just sideways would be great. Well, Brendan, I'm not saying it would go back there. I'm saying based on the bottom of the week, if this holds, and support 1 on the weekly pivots is the bottom of the week, then that predicts an inside week. Inside week meaning no low below support, which would then predict a potential high. I'm not saying it would go there, But the upside potential, if it did go up, would be weekly resistance because weekly support. WS1 to WR1 would be a typical inside week. And all that really means is if it does go up, it's not likely to go any higher than here. So this is like a no-fly zone, not likely to go that high if it went up, assuming it doesn't make a new lower low. So no low below support would also predict no high above resistance, but it could easily just head back to the weekly and sit there. Okay? But all I'm thinking is a breather. I'm not saying up, but the pivots are telling me the probability of this continuing lower in the month of May is diminishing. So if you were thinking about buying gold, maybe this is a good day. And even if it went lower, you couldn't come back and say, wow, hey man, you told me this was a good time to buy gold. I'm like, well, it is. By definition, we're at support. By definition, it's low. This is a very low price for this month using technical analysis, right? So, like if gold was high, if it was, I would say, no, now is not a good time. Well, technically it is a decent time. If you need to buy today or this week or something, yeah, you'd have my permission. It may go lower, but look, everything could always go lower. Right? You can't be frozen on these things. It's like buying a house in the crashing, housing market. Of course it could go lower. So do you want to buy the house or not? Right? Okay. So there's your gold. So today's going to be a big deal. I don't want it to make a low, obviously. 4 hour feels comfortable enough to go up. 1 hour says double bottom and back up. Do you really want to hurt me? Do you really want to make me cry? So that's what I'm thinking. Okay, so, all right, so this one was a little more clear. Let me put this back on a candlestick chart. And that was our prediction yesterday that even though the Canadian dollar has fallen off the face of the earth, maybe, just maybe, we see a little bit of strength. This 55 predicted a double top. It could still happen, or it's just rolled over. That is potential too. Okay? Which one's happened? I don't know. How would I know that? Okay? So one of these things is either it's going to head back up and then down, or it's already printed, right? It's already printed the lower high. It's about to make a lower low, lower high, lower low, lower high, lower low. But at least we talked about it yesterday. Look at this. The day before it was up. The day before it was up, 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 the day before it was up. But today it's down. And by the way, it's really 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 days in a row it went up. And for some reason yesterday we said high probability of heading back down. Whale oil be. Okay. So at the very least, right? At the very least, because again, I don't know where it's going to go, but the risk for a bull of adding more trades to this position or not taking profit has gone up. And our job is not only to have a bias, right, but be able to interpret the market as far as risk. So the risk is if you've enjoyed this for 3 weeks in a row and you notice the big drop to the 55 on the 4-hour yesterday, you assumed it would go up, but you're preparing for a top. So maybe you should scale up. Well, where are the likely places that you should probably take profit? Well, if a bear sells at M3, you're in a world of hurt because that's a swing. But the R1 would be a place and an M4 would be a place, right? Would you agree with that? That these are like the areas you would like. If you didn't act, you're not being a good risk manager. Okay, that's all. Yeah, I need to fix this watermark, huh? It's funny, I don't even see these things. Yeah, I took my machine into the shop. Just so many problems. Oil. Maybe. I don't really feel like it needs to come down anymore, though. Okay, I understand the technical analysis. What you see here is if you were bear, we're in a sell zone. Okay, but you know, I don't know, man. I don't know. I don't think there's a need at the moment to take it down to another level. I don't feel like we're in a $40 a barrel world. Right? Does it need to go up, though? Well, Ryan, one of the issues, you may have noticed there's been a lot of drawdowns in the last few weeks, but oil has fallen. Why? Lower summer demand? You know, the United States economy is doing really well. I wouldn't think there would be low demand. No, they're just moving the oil somewhere else. It's just not in Cushing, Oklahoma. Anthony says high oversupply, but what I'm saying is the last 3 or 4 weeks, we've actually had drawdowns, not buildups. We're talking inventories. Yes, there is an OPEC meeting. They're already just, you know, but we already talked about this like maybe 3 weeks ago that all of that would happen, that OPEC suddenly would show up, they'd start doing new deals and all this kind of stuff. But the bottom line is, and of course I'm on my backup laptop, so I don't have my old analysis here, but I'm pretty sure we had this as the bottom. Wasn't it $44.30? And then from there, it was likely to go back up to 54, maybe? Something like that? Like it could, it might, and you know, but you know, it just comes down to like, do you believe? And it'll be your interpretation. So I live in a country that is considered wealthy amongst its global peers. I also live in a country that has a good economy at full employment. right? My friends are putting in swimming pools and buying sports cars and luxury vacations and cruises around the world and yacht club memberships and stuff like that. Doesn't sound like we're doing bad. Other countries might be different. So it really depends on your interpretation. But I don't feel like we're at $40 oil. Certainly not $30 oil, right? No matter how much oil there is. And, when you look at things like, okay, China, if you looked at the recent data that came out, wasn't amazingly good. It wasn't amazingly bad either. And if you remember, like 18 months ago, the world was worried that China was going to, implode. Sort of the same people that were worried that the dollar was going to be worthless. Remember that? The sky is falling, the sky is falling, the sky is falling. It's the Fed. It's a big conspiracy. All right. So anyways, it just feels like we're closer to the bottom than the top. Inventories have been drawing down, but all they're doing is moving the inventory somewhere else. They're bringing more rigs online. They're doing like 3 or 4 rigs a week. It's almost like 1 rig a day gets turned on. The frackers are fracking. OPEC's going to announce a cut. The Russians are going to be on board. All right, great. But we're also preparing for a June rally, aren't we? So, I think we might be, and it's all speculative because you can see nothing's happened yet. But I think the green shoots are there for a short-term recovery in oil. And by the way, that might give us some good inflation data. Now, how about this also to plan? Okay, this is oil. Let's talk about the Fed. Have you planned out the scenario where the market's wrong about the Fed? There's something like an 80% chance they're going to raise rates in June. What if they don't? What if they leave it till September? Because they figure the economy is going to be slower in the summer. The first quarter wasn't even that great. You know what I mean? So what they need is oil to go up, and maybe the Fed's smart enough to know that oil prices tend to go up in the second half of the year. So by the time they hit September, if oil is back at 55 or 60, that's a big percentage change from where we are now at 44, right? So oil's down, the Fed doesn't raise interest rates. The oil goes back up, the Fed does raise interest rates. You see what I mean? Is that plausible? Is it plausible that 80% of the professional money managers in the world, or let's say money market participants, are simply wrong? Could be a rabbit, could be. So, I got that in my cap too. Got to think that, right? So everyone is freaking out. Oil's falling forever. And maybe it's just not true. Okay? So it's not that I'm bullish on oil. It's that we're at the bottom of the range in oil. Maybe. And I still think there's green shoots. I still think OPEC's going to announce something, and we will continue to have drawdowns, and oil will start heading back up, and then what? Talking heads are going to talk it back up, and I don't know. Maybe you buy it simply because it's cheap. I'm looking at more like 44, 54, but see, a lot of trading firms, right? Not investment houses, but trading firms. They'll buy it simply because it's cheap. And then they'll turn around and sell it somewhere else without any hesitation. Oh, that you found the pump and dump? Well, if he calls it a pump and dump, then that's it. Yeah, you might ask about tomorrow's BOE event. Yeah, that'll have the volatility that you're looking for. I guess we'll do this one. 1 hour. I don't remember doing this. It looks like we're at a top though, right? So I see pivots that predict this as a top. I see fibs that predict this as a top. I don't remember doing it though. The 147.50 looks like a top. So let me draw, maybe it'll be easier. If you're using Fibonacci, and this is your retracement, right? This predicts this area here as your exit. Okay? If you're using pivot points now, okay, this is the projected top for the month of May. Seems to be a bit of an overlap, don't you think? So what do you think? As someone who might be bullish, let's say, if you're bullish, would you be a prudent risk manager to add more long positions to this? Now, let's say at this price, even if you're a bull, you're like, hey man, I'm right in the 21. It hasn't made a lower low. Right? You can say I'm a bull, but not at this price. No. In fact, what you would most likely look for is something like this, right? Right? I think that would be more like your plan if you were going to stay bullish. But even this time frame says it's preparing to roll over, right? Or it's at least slowing down. Maybe not preparing to roll over, but at least slowing down. And even if it goes up, those are pips that have undue risk associated with it, maybe in your opinion. Now, you could disagree with me and just, that's fine. But since I use pivot points, I'd say, well, even if it did, let's say it kicked up here and just kept going, well, maybe it is the BOE meeting tomorrow. Fine. Maybe, you know, but those are riskier pips in my opinion. And maybe if you wrote this up and you took profit already and you're out, maybe you wait for a breakout pullback and then just say there's a big fundamental change going on, something big is happening with the pound, and you almost like moo trade it. Okay? But moo trades are typically daily pivots, not weekly or monthlies. Right, unless something really shocking news. Right. But even then you're going to use price action, Fibonacci, and pretty much that's it, right? Cool. So we did euro dollar, Kiwi yen, USD yen, gold, USD CAD, WTI crude, and pound yen. Emad wants to ask about pound dollar. Be careful with the questions, Emad. I'm not going to tell you because I don't know. I'm not going to answer a question like, is the pound dollar going to go through a certain price level? I don't know. How would I know that? But we can look at the analysis and you can make your own decision. Okay, so this is pound dollar. Ignore the watermark, pound dollar, 1 hour chart. Let's take a look at these things. This is a monthly M3. Is that key resistance? Well, it's where a bear would sell. Okay. Let's look farther out. Okay. This is the projected top for the week. Okay. Now the weekly here, and this is all weekly and monthly. All right, so you got to find some monthlies here. I guess we're kind of on a monthly, aren't we? What is this? Monthly M3. So we're at a cluster right now of weekly and monthly M3s. So if there are bears, they're most likely in this zone right there. Okay? And if it goes higher than that, then there are not many bears. Okay? Because they're not doing what they're supposed to do. Psych level of 130 doesn't look that important to me. Weekly R1, 30, but that wouldn't be a big deal if we're bullish. So really, if it goes higher than where we are now, if the bulls overwhelm the bears, we're looking at 30.50 to 30.80. Okay? So it either goes up to those levels or it's about to collapse off the face of the earth. Okay? And we're going to do a move like this, which takes us back to a low for the month of May in the neighborhood of, can't even fit it. Dang it. Stupid thing. What is that? 123. Let's call it 124. Okay. Right, Ahmad. So you know the fundamentals haven't changed in a couple of months. So you're either a bull on this or you're a bear. Okay, and if you're a bull, this is the exact area you should be worried about. Will there be some sort of volatility around the psych level of 130? Yes, that's why we call it a psych level. But will it break it or will it not? I don't know, right? But it looks like if you could break it, it's more like 30.50, 30.80, maybe a test of 31, right? Because if you're bullish, nothing's changed. Of course, it depends on what's going to happen tomorrow too, right? So your interpretation of what's going to happen tomorrow will affect this. If you think the Bank of England's going to talk, in such a way that maybe they'll raise interest rates someday soon, this year maybe, boom, this heads down like a ton of bricks. No, Peter, they're just pivot points. Yeah, you're bearish. Great. Well, that's where a bear would enter. If you're not looking to enter there, I couldn't understand why you were a bear using pivot points, anyways. That's a weekly and a monthly swing. Okay, weekly and monthly swing, and that's why I think we've stopped around here. Okay, so just by intermediate time frame analysis, if you're a bear, this is where you would sell, and if you don't sell here, you're just not a bear. Higher interest rates tend to attract investment. So in my book, I talk about two banks, one across the street from the other. They have the same customer service, they have the same amount of tellers, they have the same almost everything. Okay? One charges you a mortgage. No, let's do this. One will pay you 1% on your deposits. The other one will pay you 1.5% on your deposits. Which one do you choose? The one that's going to pay you the higher interest rate. So if Europe is doing things to weaken the euro, and England is suggesting that maybe sometime soon they would like to raise interest rates, then most likely the currency will appreciate. Yeah, because you would be buying it cheap now, and then when they do raise interest rates, it would appreciate, except you already bought in. So if you anticipate the value going up in the future, you buy today. So for example, let's go back to the housing market thing. Why would you buy a house in a housing market that is falling? Houses are dropping 20, 30, 40%. Why would you buy? Because it's cheap, but there's more to it than that. So you're talking about in the moment. Cheap's not even a word. Cheap is relative to what? There's nothing cheap, there's nothing expensive per se, right? If you figure, no, you simply thought in the future it will be worth more money than it is worth now. And then of course you could discount the future value and all that kind of stuff, right? That's just finance. You're just measuring the flows. But you would buy it because you think in the future it's going to be worth more. That's it, right? Same thing if you think in the future the Bank of England will raise interest rates. That change in policy, for example, should make the British pound more attractive than the euro. So you just move money out of Germany to the UK because you're going to get the higher interest rate. Which means there needs to be a demand. You got to get out of your euro and into pound. So if that does happen, in the future, demand would increase for the pound and the value would go up. So if you think that's going to happen in the future, you should do it now while it's still cheap. And that's why it happens instantly. It's like arbitrage in a sense, right? It just happens instantly. As soon as they indicate they're thinking about it, well, you might as well do it now while it's still cheap. And then, therefore, the pound appreciates. And then when they actually raise interest rates, what happens? The pound falls because people already bought it 6 months early, and then they dump it to take the profit, and then they buy it back. Yeah. That's why you buy the rumor, sell the news kind of thing. But whatever. The logic is still there. If you had to choose from having your money in euro, where you face risks, or having your money in pounds, where you face risks, well, maybe the risks are not even. Maybe they're not equal risks. And if the Bank of England is thinking monetary policy is too easy, and maybe the inflation's too high now. See, why would inflation be too high in the UK? Because the value of the pound has dropped significantly, which means prices have to go up, which is called inflation. So at some point, if now the Bank of England is approaching their targets from 5 or 6 or 7 years ago, then they have to normalize, which would then appreciate the pound back. Plus, I think a lot of people are a lot less freaked out about Brexit. The sky hasn't fallen yet. So, anyways, let's save some juice for tomorrow, huh? Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. Thank you for coming to Forex.Today every day. Thank you for posting on Forex.Today. Thank you for leaving feedback to the posters on Forex.Today. Thank you for being on my team. And I don't know. Thank you for being you. See you tomorrow, huh?